All right, so basically today we're talking about leverage, how it can turbocharge volume and improve price discovery. So Lennix he describes himself as a pragmatic futurist in fintech. He's the financial markets director at OKEx. And we've got Sunny Ray, who's passionate about sales and business development with a drive to create partnerships and opportunities in new geographies. So I'd just like to start out with Lennix. Could you explain to the audience what leverage is exactly?
Leverage is some kind of instruments that you can utilize or deploy a small chunks of capital and trade and exaggerate your profit and loss with a particular financial instruments. So basically, you can put any kind of underlying and trade and leverage that accelerate your profit and loss at the same time.
So why is it useful? How does it increase demand in the market?
Yeah, maybe Sunny can add some point on that.
Sunny, if you like.
Yeah, so maybe just as, can everyone hear us out there? Awesome. So just as an example, let's say you put, for example, $100 into an exchange, and let's say you do a 5x leverage on that. Now for every dollar that the market goes up in price, instead of making $1, you'd make about $5. And so leverage is essentially just a way of borrowing funds against the house to accelerate your ability to kind of ride the markets. Mm-hmm.
How does this improve price discovery then?
Yeah, so I think it's going to be a very difficult topic, but I would like to put it simple. So if you only have spot, you can only buy or sell particular underlying like token or Bitcoin, and you don't have the capability to short, basically speculate in another direction. Basically, the market will be a lot more volatile because it's entirely driven by complete sentiment. For example, if you can see, Bitcoin, the volatility of Bitcoin is a lot more volatile before CME futures. We're talking about maybe 200% annualized volatility to 150, 180 annualized volatility before the CME futures got launched. So after the launch of CME futures, basically everyone, if you happen to hold a bunch of big chunk of Bitcoin and you want to hold it, and you expect there will be maybe a short-term downward pressure for a certain kind of token like Bitcoin, instead of just selling your Bitcoin, or you can have another option right now by shorting the futures. So by the launch of CME futures, I think you can see the volatility of Bitcoin is substantially decreased from maybe 100% to right now 80% annualized historically. Basically, you can a lot more stabilize a certain kind of underlying. At the same time, because of the buy and sell activities happens, executed on the derivatives market, that will actually reference back for the spot market. The spot market, the reference price of the spot market is not entirely driven by one single exchange, but then other markets called leverage. It's called derivatives markets. So that's part that we can we call it price discovery process by different kind of instruments. We should add more. The crypto market should add more by not just on directional play on derivatives or futures, but we should have other instruments like maybe options to assist on the price discovery process on volatility.
You mentioned futures, Sunny. Yes. You're doing something with futures. Could you explain to the audience how that might help price discovery?
Yeah, definitely. So Kraken recently acquired a company called Crypto Facilities out of Europe. It was the first regulated derivatives platform. And just to give you guys an idea of what futures are, because some of us might not have a full grasp of it, it's actually a fairly simple concept. So as you mentioned earlier, one of the things that is kind of proven to be true amongst even other asset classes is that as you introduce things like futures, you do have a decrease in volatility, and you have the ability to kind of find your price much more efficiently. But so what is a future? So let's use a really simple example. Let's say I'm a pig farmer, okay, and you're a restaurant owner and you serve pork belly at your restaurant, right? Everyone likes pork belly. So me as the guy who's raising these pigs, I might not want to incur some sort of volatility in the cost of or the price of those pigs, let's say 3 months down the road or a year down the road, mainly because my costs as a farmer are somewhat fixed. And so what I could do is I could effectively go out and have a futures contract that says, well, let's say it costs me $6,000 to actually raise these pigs, and I want to sell these pigs for $10,000, you can have a future contract that kind of sets that. And even despite what happens with the price of the pigs in the future, I'm kind of guaranteed that price. And then on the flip side, let's say as a restaurant owner, you also have your business expenses and whatnot, and you might not want to have this fluctuating cost of this resource for your restaurant. And so you would have a futures contract in the opposite direction, where that would hedge essentially your bet against volatility. And so that's kind of how futures works. Obviously, in the crypto world, it's a little bit different, but it's also similar.
Right. Lennix, do you have anything to add in relation to futures market and the trends you're seeing in Asia?
Yes, I think the entire derivatives volume, I think around a big majority are driven by Asia. So a combination of a bunch of Asian exchange, maybe in China, based or Japanese based. So I would see the success of APAC related derivatives volume would be contributed by relatively healthy markets in terms of different kind of market participant in Asia. So yeah, in order to formulate a relatively healthy market for derivative exchange, you need a robust product design first, and you need to have a really smart and robust technology stack for building that derivative exchange. Because derivative exchange is very different than spot exchange. You're trading a highly leveraged products. You're trading 100 times leverage. Mm-hmm. You're only posting margin of 1%, and you need to liquidate your position when your maintenance margin hits 0.5%. So, and by executing your liquidation orders, you have to think about the impact of the potential impact of the market on the order book itself. So APAC exchange or Chinese exchange, or OKEx, they spend a lot of time. We incur 2.5 years at least to upgrading, improving from technological architecture and to the design of risk methodology. So the product is good first. Then we have a little bit healthier market participant we have lots more market makers. We have lots more small and medium-sized quant funds. We have a lot of speculators. Mm-hmm. We have great retail participants. Mm-hmm. So the market is getting from retail participant and getting a lot more professional, sophisticated, institutionalized right now. So I think that is the reason why APAC derivatives is getting maybe very dominant in the world right now.
Right. So I guess essentially the tools, futures, and as well as leverage have essentially stabilized the price to some degree.
Yes.
Okay, Sunny, I got a specific question about Kraken's experiences. Yeah. What have they been like with your 2 times and 5 times limitations to leverage increases? Is it something customers and clients prefer?
I'm sorry, can you repeat that question?
So what has Kraken's experiences been like with leverage so far on the exchange? Just go with that.
Yeah, so we introduced our margin product a couple years ago, and it's been very popular. So on our basic kind of spot exchange, you can on a basic exchange you can have up to 5 times leverage. Yep. But then on the futures contracts, if you're a professional kind of company, then you can go up to 50x on that. So we've seen quite a bit of interest in this space. We've seen a lot of uptake, and just to give you some examples, in terms of like how price discovery happens and how it kind of maybe even accounts for some of the inefficiencies, is that, let's say, I like examples. So let's say again, I'm a trader and I've got, just as a number, $100,000 on my platform, and I've got a wire transfer coming into my account that's maybe taking a week or maybe a week and a half. And I know it's coming in maybe for, let's say, $500,000, but it's not there yet, but I need to make a trade. So I could technically take that $100,000, apply my 5x leverage, have access to $500,000, and actually start trading that amount.
re-implement that back into the market.
Exactly.
So, yeah.
Exactly. So that's one example. But one other kind of point to note, and I think you brought this up earlier, is that it's important to note that there's also something. So, like for example, if there's a lot of volatility in the market, if the value of the asset drops below 20 or 30%, there's something called a margin call that takes place, where a company would actually liquidate the customer's assets to cover some of those losses. And so if you're wondering about how companies like ours protect ourselves against these types of scenarios, that's essentially how it happens, through these margin calls.
Yep, margin calls, right. I guess moving forward, what are some of the future features you guys would like to see implemented for further price discoveries on the exchanges and businesses that you run or work with? What's some of the future implementations of tools or trading tools that you'd like to see that maybe you see in traditional markets but haven't quite transitioned over to crypto?
Yes, I think right now the entire trading volume involved the trading instruments, that's maybe a combination of futures. Precise speaking, we call it inverse futures. So the profit and loss will be kind of inverse relationships with the underlying, and perpetual swap. So basically the two kind of linear directional play instrument right now. So you can long, you can short on 100 time leverage right now. That is the current instrument, and we're trading 11 billion USD notional per day right now in the entire market, derivatives market space. The next game is going to be, I would say, linear futures. So basically, you can pose stable coin as a margin and trade, for example, Bitcoin USD futures. So the relationship of profit and loss should be linear. And another competitive ground should be option contract. So option. So the only thing right now that a trader, professional trader, cannot hedge should be volatility, what they call the delta risk or the gamma risk. That the volatility cannot be hedged right now.
Yeah.
So I think one or two platform or a couple of platforms in futures may be starting to build an option-like product. But I would say there's two types of option-like products. So one type of option-like product is you can only buy option. So you can only buy call, or either you can buy short. And other type of option-like product should be you can both buying and selling option at the same time. So selling option is particularly difficult because the calculating margins and calculate and trying to calculate and forecast the volatility, the implied volatility of different kind of option is particularly difficult and maybe beyond the traditional option pricing theory because of the relatively short history of Bitcoin right now. So with a small amounts of data, you as an exchange, you have to try to calculate the implied volatility and calculate the margin requirement of a particular option contract and sell the contract. You need to protect your risk. At the same time, you don't know, there's no particular financial theory or economic theory or in-depth research to tell us how we should calculate. So I think the industry or the trader or the exchange should work together to try to figure it out. But I think it would be a really, it would be a great product if we work well, because finally the traders can price volatility and trade volatility. And for retail trader, you don't have to worry about being forced liquidated. So it's going to be, I would say, the next generations of financial instruments.
Lennix, Sunny, did you have anything to add to that?
Actually, so I agree with him on a lot of those fronts. The one thing I wanted to mention is that, so Crypto Facilities, that the company that we acquired, they actually have a kind of an indices product that the CME is actually using to reference. And so one of the kind of key components of being able to do futures well is you need to know what the price of, let's say, Bitcoin is. And how do you know what it is? Because let's say if you're looking at like one exchange or two exchanges, there could be a lot of problems with that, because what if somebody who's kind of working on those future contracts, they try and game the system by DDoS attacking that one exchange. So having a kind of a reliable indices is a critical part of being able to make this all happen. And that really involves being able to kind of take in data from a lot of the exchanges. It's about having kind of like redundancy. It's about like the entire infrastructure, like the methodologies, the compliance, all that goes into that is actually quite complicated, and it's quite simple from like trying to understand it, but in terms of implementing it, it's actually quite challenging. And so I just thought I would like kind of highlight that as well. I think
are there regulatory pushbacks? Is this something of a concern when you go out to establish this type of trading? Do you guys consider the regulatory environment at all in your countries?
Yes, I think we
obviously that's.
We have a very strong background in compliance. So we have, and we at the forefront of crypto compliance or regulation in different jurisdictions, especially on APEC. And we have been challenged questions or inquiry related to our derivatives products. On the summary, so I would say Japan is relatively friendly, open mind to crypto derivatives products. So they have some kind of a solid framework. By if you want to launch and leverage product in Japan, it's possible. And they have a new, very rigid and difficult framework for it to achieve. But yes, it's possible. The leverage is controllable. Basically, I said, if you want to launch your leverage product, you can allow for 4 times leverage. So for our jurisdiction in APEC, I think Singapore, precisely, MAS is very open-minded to discuss whether or not the traditional futures product would be possible to be listed or trade in Singapore jurisdiction. And they even talk about the differences between cash settle and the difficulties in physical delivery. I would say Singapore and maybe Japan would be the two forefront in crypto derivatives related regulations.
Okay, I'm just a bit conscious on time, so is there anything you'd like to add, Sonny?
Just on that point of regulation, as I mentioned, Crypto Facilities is the first regulated derivatives platform, and so they are regulated in Europe. We don't offer our futures product in the United States currently due to some of the regulations there.
Right.
And
that's why I asked, because we're still currently in a situation where we're still developing, trying to work out the framework, and once everything falls into place, then I think we'll start to see a smoothing of price discovery and everything else that's associated with that too. So that's why I brought that topic in. I'll now open the floor to any questions. If anyone wanted to ask Lennix or Sonny any questions, particularly with leverage or turbo trading. No?
With our panel now, we'll bring a microphone to you if you are so inclined with a question for these guys on leverage. Yeah.
Nope. Okay.
Anyone?
Oh, yep, we go.
Nope. Sebastian, it's all yours.
No? Okay. Well, I'm pretty sure that concludes the discussion. Thank you very much for your time, guys.
Thank you.
All right, you guys are ready?
Yeah. Thank you.